We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at Bullish Chips to get real-time updates as to our entries and exits on not only scalps and day trades, but our mid and long-term swings as well. Make sure on YouTube you hit the subscribe and the notification bell. That way you're notified whenever we release a new video. We do release new videos every night during the week and once on the weekend. Make sure you check out our other videos if you're new to this channel to get a better feel for the different lines that we use, the broadening formations, and the colors that we use to indicate what time frame that those lines indicate, and just to get a better feel for our overall trading method. If you like today's video, make sure you hit the like button to help our community grow. And remember that we are not financial advisors. We do not provide financial advice, but what we do provide is our view at the price movement for SOXL, not only in the current day, but in the previous days, as well as where we think price action will take us in the future. So without further delay, let's go ahead and get into the charts. And as it's the weekend, we're going to pull up the week chart. That's what we're looking at right now. And we can see last week, we did close as a red 3 or an engulfing candle. So we did break higher than last week's high, but we did also break lower than last week's low. Let's go ahead and zoom in a little bit on this so you can see a little bit better. Because it wasn't very much that we went above or below last week. So while it was a red engulfing candle, it was the first red candle after 7 straight green candles. And we did also, with the marking of that high and creating a soft low, we did create a new broadening formation on the week. So we have this new purple line right here, which is the broadening formation, and we'll go ahead and remove the old one because we've pretty much broke through it and created a newer one above it. We can see we still have the daily broadening formation, which started out wide with these orange lines, orange broadening formations, but it did narrow out throughout the week. So if we go down to the day chart, we can see that, we got the higher high and then we got the lower low to create the broadening formation, right? Followed by another higher high and another lower low, but they were much tighter, which brought the broadening formation on the day chart into a tighter formation, right? More of a range than a broadening formation. So we have a clearly defined low of the range right here and a clearly defined high of the range up here. One thing that we do want to do, oops, I'm not sure why this is on here. One thing that we do want to do as well is take a look at the month chart, because we're coming to the close of this month, right? So we can see we did get the 2 up on the month, but it is forming more of an inverted hammer. We are still green. It's not a red inverted hammer. A red inverted hammer would be more of a signal that we're probably going to see some more downside, but it has remained green, and so that's a little bit more bullish. You can see it's kind of similar here. It was green. We did actually get another red month down, so that can be deceiving as well, just remaining green. We have to remember just the price action shows that it tried exploring higher, and so far it's been pushed back down into the previous month's range. Well, not quite into the previous months. Yeah, it is actually. We closed just inside last month's price action, so it's still kind of more of a neutral indicator at this point. It's not really giving us an indicator either way on the month time frame. It is the middle. We're getting to the second half of the we're still at the beginning of the first quarter, so but we'll go ahead and take a look at the quarter. The quarter is about the same, first month in, so not much to tell from the quarter either. So if we just go back to the week here for a second, we can see Again, we had 7 straight weeks, 1, 2, 3, 4, 5, 6, 7 straight weeks that were green, and we came into this area that we've been talking about for basically a month now, right? This green dash line is a monthly downtrend line if you're new to the channel. Again, we've got this weekly broadening formation, and we've got this year's flip that we're all contending about in the same spot, which is causing us a little bit of trouble trying to get over. Right, so we've been here for about 4 weeks in this particular range after that gap up on some good tariff news about 4 weeks ago. So we've kind of gone sideways, digested the movement up that we did have, and just consolidating, trying to figure out at this point whether bulls will continue to their push up, regain their strength during this sideways action for a second push, second wind, which would really be a third off of these April lows, because here's the first push, here's the second wind. Can we get a third wind? We do have the higher highs on the week right here at 32.64 and 36.15. So some higher highs on the week time frame that we're getting kind of close to. Can the bulls push us up and reclaim these levels? If we do get more action to the upside, we do have this weekly broadening formation is up here with this gap on the day time frame. So this area could be, if we get the push up, it would give us a higher high on the week frame, close the gap, possibly hit the broadening formation. There's a monthly broadening formation up here. It'd be a pretty big push, and it would kind of go against conventional seasonality. If we have to take everything into account, even though we're just trading one symbol, we do have to think about the market as a whole. Tech does seem to underperform in the months of August, September. However, you do want to look at individual seasonality as well, because where those individual semiconductor tickers lie in the holdings of SOXL can also play a big part as well. So while most of tech does have a pullback in August, September, AMD, if you look at their seasonality, is actually pretty good in August. So they're pretty high up in SOXL. If others start to be a sympathy play for AMD, AMD could, the rising tide floats all boats. So it could bring the semiconductor industry up during August. So we just want to keep in mind that we've got some kind of conflicting information as to where things may go in the future. So we want to just continue to stay nimble, continue to follow our rules, and with doing that, we've been able to profit in a sideways market. So let's just continue to go through the things that we need to go through to follow our methods. So actually, before we do that, let's take a look at the internals for the QQQ for the week. So we've got SOXL over here, we've got the tick, we've got VolQD, and we've got ADQD. So the tick, again, if you're new to the channel, is literally how many stocks are ticking up or ticking down at the time. VolQD is volume inflows and outflows, and ADQD is market breadth, essentially. So the breadth of QQQ, how many stocks are going in one direction. So if we look at Monday, we started out pretty high in comparison to last week. We were starting out towards the highs, right? Which gave us the 2 up on the week to begin the week. But it did trail off during the day, which was evident in the volume inflows. Went to trend higher zone, this 400 million mark, hung up there for a little while, and then trended off. And you can see that's what happened in the afternoon. It fell off. Same with the tick. It opened up in trend higher zone. It came down to zero line, actually went down to trend lower zone, which wasn't really reflected in the morning on a 15-minute chart or higher, you'd have to get down in the 1 minute and 5 minute charts to see this kind of pullback on the shorter time frame. I guess you can kind of tell from the wick that's on that first candle, but then it got back above zero line, and then at the end of the day trailed off, right? So we can see, I'm not going to go through every day, but you can see the internals pretty much reflect how the trading day went for SOXL. So again, remember to use your internals. It's not going to be the only indicator you want to go off of, because sometimes they can be misleading, especially if breadth is really low. Volume inflows could be really high, and the price could be going nowhere because breadth is low. All the money could be just going into one or a few names, right? So it's just another tool in the toolbox, but something we want to keep in mind and monitor during the day, where internals for the Qs are going. So let's get back to our charts, and let's get down here. Let's get real granular. Here we go. So again, if you're new to the channel, we have a few different charts that we use for day trading and swing trading, right? This is our scalping chart. This has the most indicators on it, because when you're getting real zoomed in on something, especially on a 5 minute, if you're trying to scalp or if you're trying to pinpoint an entry or exit, if we're zoomed in real tight, we don't want to have to know what all these lines indicate. The colors indicate certain things, so we already know that 100% green and yellow is the high of last month and last quarter. We can, on this fib, just simply rest it on it, and we can see this is the top of a fib extension. That should actually be labeled a little bit better, to be frank. But here's our 4-hour trigger to the downside, overnight low, previous low of day. This is a fib of the 78.6 of the 2024 run up. This is the 200 fib extension of the gap and go from 4 Mondays ago now, which I was talking about earlier with the positive tariff news. Here's the overnight high. This is the 50% of last week, right? So I won't go through all these indicators, but again, go through our videos and the bonus content on our channel. There's also links to these particular videos in the description of this video, to get an idea of how we set these charts up, and what all the different lines and colors for those lines mean. If we go back to, let's go back to the 15 so we can clean this up a bit, right? So the first thing we want to do is remove the opening print for last week, right? Oops, which we did there. And actually, let's go to the 4-hour so that we can change our 4-hour markers. Again, if you're new to the channel, the information about these 4-hour markers that we use for our scalp and day trades, that information is in those videos, and they're not very long. They're pretty quick, because the information that we get from these indicators may be very detailed, but how to set them up is very simple. So we'll take the 4-hour trigger to the upside, put it on the high of the second 4-hour of yesterday or Friday, and we'll take the previous high of day and move it to Friday's high of day. We've already moved previous low of day to Friday's low of day, so let's go ahead and go to the day trade chart, and let's get rid of, looks like we already got rid of the opening print for the week, did we? No, it's up here. So remove the opening print for the week, because that won't be valid anymore. We'll move our 4-hour trigger to the downside, to the low of the second 4-hour from Friday. Same with the 4-hour trigger to the upside. We'll move it to the high of the second 4-hour of Friday. Previous high of day, oops. Previous high of day is easy enough, and previous low of day is easy enough. Let's go to our swing chart. We don't have the 4-hour markers on the swing chart, but we do have the opening print for the week, so let's get rid of that. And then we also need to move our high 50% and low markers for the week, right? So let's activate this, and this is a simple Fibonacci indicator, but I've only got the 150 and the 0 marked out, and it's purple, so we know that it's for the week. So whenever we're in on a smaller time frame chart, we see if we see this short dashed line in purple, we know that's last week's low. This longer dashed line in purple, you know that's last week's 50%, and then this solid purple line at the top, that's last week's high. So let's go ahead and move those for our scalp and day trade charts. All right, activate. All right, so that's all done. Right, and the next thing we want to do is move the expected move for the week. All right, and if you're new to the channel, the way that we do this is we go to the options chain. Oops, let's get out of this. There we go. Go to the options chain for SOXL, and we go to this week's options chain, and we can see that the market makers expected move is 2.407 cents, $2.40. So we'll round it to 41 cents. So $2.41. The close price of 25.60. So 25.60 plus 241. I'm sorry. That would be 28.01. So let's go to here. Edit. 28.01 is going to be the high. So 25.60 minus 241 would be 20. What was that? 60 minus 41 is 19. Okay, so that is 23.19, and just make this 28.01 to 23.19. We'll just copy this so that we can take it to the next one. And then we move that up 7 days, right? Which will take this block and move it to the next 7-day chunk. There we go. Did I mess something up? 28. No, that's right. All right. So we can see that this week's expected move is somewhere in between 28.01 and 23.19. Remember, this dashed white line is last year's low. So not only would that take us below last year's low, but that would also flip the month and the quarter red. Because remember, this line right here, you can't really see because the M and the Q overlap. But this is the month and the quarter flip. So right now the month and the quarter are green. As you can see from the upper left hand side, we've got our time frame continuity levels here. So the day was green on Friday, but the week was red, the month was green, the quarter was green, and the year was red. So not full time frame continuity to the upside or downside, which would mean we're probably going to have choppy action, and that's what we've had, choppy action. So just looking forward, we did have the failed 2 down on the day, which does set up the 1, 2 down, 2 up, but the magnitude is only the high of this 2 here. So again, this brings us to last month and last quarter's high, right? You can see the yellow line here and the green line here. The yellow line is for the quarter, the green is for the month. So again, we've still got this monthly downtrend line, this weekly broadening formation, last month and last quarter's high and low, all of that stuff coming into play. This year's flip, all of it is coming into play to give us resistance, and which is why we've had this choppy sideways action. So let's continue to move forward. Oops. Let's see. Let's move the extended move here. Oops. Come on now. There we go. And move this 7 days. And there we have it. The expected move for the week has been moved on our day trade chart. Let's do it on the scalp chart. Oh, let's go back. Let's go back. I forgot to get this. All right. Edit. Why does it keep doing that? There we go. And we'll move it 7 days. And we've got our expected move for the week moved over there. Yep. Okay. So now that we've got our 4-hour markers moved, we've got our week high 50% and low moved. We've got the week's expected move also moved. Let's go ahead and get into our notes so that we can be prepared for the week coming up. So let's go to our swing chart. Let's make this a little smaller here. And let's go to the week so that we can set up our week targets. All right. So again, we had the 3. And let's bring this out. There we go. We had the 3 on the week. So I'm going to be looking for a failed 2 down personally. I would enjoy it, failed 2 down, because that would give us a little bit of pullback to get into some longer positions if it does fail and start to pull back up and hammer back up. That would give us, you know, the indicator towards the end of the week that we could get the 3, 2 down, 2 up. Again, not a whole lot of magnitude here. It would take us, depending on where the 2 closed, if it closed back inside the 3, you know, the magnitude is only the high of the 3. You know, it would give us a good target to shoot for, but not just because it's an easy target to shoot for. It, you know, has a magnitude, but it would put us back green on the year, which would flip us into full time frame continuity to the upside, which is just an indicator that, you know, we can go long here. I don't know that we're going to get a failed 2 down because of the seasonality that we're coming into, where tech does dip in August, September, but it's something I'm looking for. At the same time, let's go ahead and set up our targets for the price action, whether it's the upside or downside. That way we can be ready to capitalize off of either. Let's go ahead to our notes and let's duplicate Friday's notes, but we'll make it for Monday. This will be July 28th. These notes are from July 27th. There will be 107 trading days left in 2025 on Monday. The close price was $25.60. All right. And the week will be, was it 8-1, I believe, or is it 8-2? Yeah, 8-1. So let's go back. This is for the week of 8-1. Right now, we don't know if it's green or red because it hasn't opened, but we do know that the month is green. It'll flip red at 24.38, same as for the quarter. And the year is red, but it flips green at 28.13. So our expected move, did we keep this? Expected move for the week. No, we didn't. So 28.01 is our high. The expected move is 241. And this is for 7/28 through 8/1, right? This is Friday 8/1. We don't know what the expected move will be, so we'll blank that out. All right, we're just getting prepared for the week. 2319, 2801, and 2319. All right. So again, we don't know what the week is, red or green yet, because it hasn't opened. We do know the month is green. It flips red at 2438. Same for the quarter. The year is red, but it flips green at 2813. Our expected move for this week is 241, which is 2801 to 2319. We don't know what it is for Friday yet because we're not there yet. We do know we've got gaps above at 48 and 59, as well as gaps below at 22, 15, 9, and 8. All right. So let's go ahead and fill out the triggers and targets for the week. So this would be a red 3, 2 down if it triggers to the downside. Take off that underline. So the trigger is, let's go back here. The trigger is the low of this week, or this past week. So that's 2483. And the target would be, we'll just go in succession. First, I would say it would be the quarter flip. We're really already close to the low of this candle. So the quarter and month flip, which is 2438, which we've already got there. 2350, which is last year's low, would probably be our next target. The high of this gap is 2263, which would be our next target. And 2198 is the gap close, which would be the next target. We know that the lower low is 2028 right here, and the next lower low is this 1510. Right? We've got that there. So for the downside triggers and targets, we're good, right? The 3, 2 down triggers at 2438 with the first target of 2438. I'm sorry, it triggers at 2483. Target is 2438, which should be pretty easy to get. Next target would be 2350, 2363, 2198. Lower lows are usually magnets when it comes to downside targets, so that would take us even below our most extended target. Don't think we would get a lower low at this point, but just something to always keep in mind. So this would be a red 3 up if we're going to the upside. Take off that underline. If you're not sure what the underlines and bolds mean, make sure you watch our previous videos where we break down a little bit more. Basically, underline means that it has triggered. Underline and bold means that it's triggered and still in force. So in this case, on the month, we're no longer in force because the in force trigger is 2584 and we're sitting at 2560. The same is for the quarter. Right, it has triggered. It went above 2584, but we're back below 2584, so it's only underline. Underline indicates that it's triggered. Bold means that it's in force. So no strats are in force either to the upside or downside. We're very close to getting back into this downside strat of 1, 2 up, 2 down, 2350. So we don't want that to trigger back down, but if it does, we know what to do. It's the same type of thing that we did in April, end of March. We sell calls, we buy puts, and we make money to the downside. So nothing to be afraid of. Even if you're a long-term shareholder, I've got a couple hundred shares of SOXL myself. Even if we're going to the downside, that's your opportunity to sell calls, right? Hopefully you've got a low enough cost basis, you weren't buying at highs, that if you do get called to the board and have to exercise or sell those shares, you'll be making profit. But if not, then any type of dip that we go through would be an opportunity to pick up shares at a lower price, bring your cost basis down. So let's get back up into the triggers and targets. Again, this would be a 3, 2 up. The trigger to the upside would be if it would have to break higher than last week's high, meaning last week's high 2850 would be the trigger. Right now, our first target 3055 is kind of lofty to begin with, just because we've been in downward momentum, right? We have a bearish engulfer, right, for the week. So we're sitting at $25. 30 would be a pretty lofty target. So the first thing I would look at is, the next, a high looking to the left. What's a high or a low? And we can look at this candle right here. This high is 29.26. So while it's not, it's still, it's somewhat close to 30. It's a little bit closer to this high, which if we fight all the way back through this candle and get back to this high, this would be a point where things would probably be pretty exhausting for the bulls. Let's look at the swing. Yeah, if we look at the expected move, it doesn't even get us up to that level, right? So that would be a pretty good target for us. Let's go back to the cleaner chart. All right, there we go. So this would be a pretty good target for us. So this 29.26 would be a good target. 29.26. Then we have the 30.55. We'll take this one off there. That's kind of lofty. So we got 29.26. We've got 30.55. Let's bring things down a little bit. All right, 30.55. And then our next one is 32.64, which is this higher high on the week, right? So that would take us well above the year flip, well above this monthly downtrend line, well above this broadening formation. We'd be pretty bullish at that point. So there you have it. We've got our triggers for the upside. If it goes above 25.50, if price takes us above 28.50, our first target is 29.26, second is 30.55, then 32.64 with the higher high of 32.64. I'd say that'd be pretty good movement for the week. We probably have to have a pretty bullish catalyst, but that is that. So we've got our week filled out. We don't need to do anything with the month because it's not a new month. We will at the end of the week be having a new month update, so we will need to change our triggers and targets, but we don't need to do anything with the quarter and don't need to do anything with the year, right? So now let's get a little bit more granular. Let's start out on the 4 hour. Let's get into our day trade chart and let's go to the 4 hour. And you can see we are in this consolidation, right, on a 4 hour time frame, slightly going down, right? So this monthly downtrend line is coming back into play. You can see how it's just riding it down right there, right? Not saying that's the only indicator that we're going off of, but we like to use, especially with trend lines, we don't like to use just trend lines, but if trend lines are lining up with horizontal lines, like these last month and last quarter's high, the 78.6 of the 2024 run up, those are all coinciding, so we know this is going to be an area of resistance, right? So even on the day chart, this does look a little messy, but we've got an hourly downtrend line going right there. Looks like it's tried to break out of it, but we're still close enough to it. We're going to leave it on there. This hourly broadening formation, this 4 hour broadening formation, this 1 hour broadening formation, that would signify a little bit more maybe broadening but more downside action. However, if we just look at price action, we had the hammer and then a 2 up that stayed green, so it didn't fail or anything like that. So price action would indicate more of an upward open or at least upward price action on Monday. But again, we'll see. For our 4 hour triggers and targets, this would be a 2 down combo 2 up that would trigger the high here is 25.62. So we're looking at the upside, 25.62, and this again would be a 2 down combo 2 up, right? 25.62 with the magnitude being the high of this 2, which is 25.79. And our extended targets 25.7. I would say this the high of this candle is the next extended target, which would be 25.91. 25.91, and then probably got those other ones from the scalp chart. 25.62. No. Oops. What's the next one that we have? 26.22, 26.69. 26.22. Don't know where we got that one from. It must have been, we must have drawn a fib at that time, but we'll leave those on there because we got some pretty extended price action there in comparison. So you know, we gotta have something. I think it might have been this open or close. 26.22. Yeah, the open of this candle is where we had the next marker. That's what that was. So if we do break above this range here, our next target would be the open of this candle. 26.67 is last week's 50%. Right? And then 27, I'm not sure I had 01, 27 flat would be my next target. Again, if you watch our previous videos, there's plenty of evidence where round numbers, you know, the 27s or 27.50, those are a lot of times targets or points of control for SOXL. So we've got our triggers to the upside, our magnitude and extended targets for the two down combo, two up. Right, so let's go to the downside, which would be a 2 up, 2 down, which would trigger if we go below the low of this 4-hour candle, which is why we've got this down marker here, this 4-hour down trigger. This low is 25.44, which is already there, interesting enough. 25.44, and the low, the magnitude for this, for a 2 up, 2 down, would be the low of this candle, which is 24.83. 24.83. We can use an extended target, 24.38. This candle right here would be a good marker. So this is, the low of this is 24.62. 24.62. And 24.38, which is the month and quarter flip, would be our next extended target. And we can see 24.62 here is a lower low. So that plays in well with this extended target. So just like always, the magnitude for a strat flip on the 4-hour is the trigger on the day, right? And so that's the case for the upside and downside. Actually, no, because it's a 2 up combo, 2 up. So the high a day is actually the trigger on both to the upside, the 4-hour and the day. So we can see on the day chart, let's get to a cleaner chart, there we go. On the day chart, this would be a 2 down, 2 down extension or continuation. There wouldn't be a strat to be called, because 24.84 is this low, a 2 1 2 down. You see it's 2 1 2 down. This low 24.83, this low 24.84. Yeah, so it ran this strat, so it completed this strat. So this would be this strat continuation, 2 down 2 down. Let's see, our first target would be 24.38. Oops, that's why we don't have a magnitude, because it's not a flip. We just have a strat extension or continuation. So 24.83, target would be 24.38. 23.50. What is this 3? This low 24.28. No, that's too close to 24.38. Yeah, so our extended target would be 23.50 to the downside, which is last year's flip. 23.50, last year's flip. So we're prepared for Monday. We're prepared for the week. We're prepared for the rest of the month. We're prepared for how the quarter and year may go. But if we look at, we've got our week triggers, what the strat would be, the trigger, the targets, lower lows, that's all to the downside. And to the upside, we've got our strat, we've got our triggers, we've got our targets, and we've got our higher highs. Right. On the day, we've got triggers and targets, 4-hour triggers and targets, right? So we know if price action goes below 25.44, we can grab puts. If especially if we're below the opening print, maybe below previous low. Over opening. If we're below previous low a day or opening print or overnight low, some indicator at the beginning of the day to show that price action is already pushing down, and then we get the trigger, we go below 25.44, we can jump in puts, and we know that the first target that we're looking for is 24.83, because that's the magnitude of this strat, the 2 up 2 down reversal. Then we have our extended targets, but if we reach the magnitude of this strat, that also triggers the day, right? And then we know that we've got our targets to shoot for further. One thing we didn't fill in is what the strat would be on the day. So this would be a 2 down, 2 down extension. I don't know why I keep calling it extension. It's continuation. 2 down, 2 down continuation. And this would be a 1, 2 down, 2 up. Failed 2 down, 2 up with the trigger of 25.62, a magnitude of this right here, which is the high of the candle to the left of the 1, which is 25.91, and we've got our higher targets. And again, if you're new to the channel, we use a combination of the strat along with a few other things. Again, we talk about this in some of the videos in our bonus content. If you need more information on the strat, you can go to Rob Smith's YouTube page, Smith in the Black, rest in peace Rob, or you can just use Google or your favorite search engine to find out more information about Rob and the strat. There's plenty of information out there. So if you're wondering what these 3s and 2s and 1s are that we keep referring to, please make sure you go and check it out. It's really the easiest way to understand price action for a ticker symbol, really, and it can be translated to more than just stocks. If you're into crypto, you can use it for crypto. A little bit, the movements in crypto can be a lot quicker, so you got to make sure you're on top of it. But the strat can be used for any charts, and Rob went through basically every ticker symbol in the whole S&P 500, Russell 2000, QQQ, to show how this numbering system carries over to any ticker. You can use it for any ticker. But so we've got our information. We know what we're looking for this coming week. More indecision, really. We've got the tightening, broadening formation on the daily time frame, so we could just see more action to the top of the zone, back to the bottom of the zone, back to the top, to the bottom, until we fully resolve this monthly downtrend line, fully get above this year flip, or fully get below this quarter and month flip. It's just really just kind of a waiting game. I wish I could tell you more. I'm not into predicting the future. I just play price action as it comes to me, and have a plan for where my targets are if it goes in a particular direction, right? Whether up or down, we know what we can get in and where we need to get out. It's just a very simple method for basically making money every day off SOXL, which is probably one of the best bang for your buck as far as delta to theta and premium is concerned for a high beta stock. So I hope you enjoyed this today's episode. If you did, hit the like button. Make sure you're subscribed to the channel so that you know whenever we get the new videos released. Yeah, it's just kind of a waiting game right now. We had a real good bounce off of the April 7 lows. We've taken advantage of that. We still have long positions that we're in from that low. And we're just looking for the next opportunity to make a bigger chunk of money than, just the small amounts that we're making consistently on a day-to-day basis. There's nothing wrong with that. It's always a good thing if you're bringing in income every day, especially if it's an extra income. If you have another job or something else you do to make income, this is extra income. But admittedly, the profits right now during the day are smaller, than the ones that we get for a week long or month long run. So sometimes that's just how the market goes. We have to digest those bigger moves that we've already had, and really just that's a time to build up capital and get ready to make bigger or longer purchases in the up or downward direction once we get those triggers. So just stay nimble out there. You don't need to trade every day. We do just to kind of keep it light and keep you continuing to give information on how we trade our method. But you don't need to trade every day. You should be trading lighter right now anyway until the market makes its decision. And yeah, just continue to follow along, follow us on Twitter, and stay up to date with the entries and exits that we do make during the day. But I hope everyone has an enjoyable rest of their weekend, and I wish everyone luck in the week's trading. Have fun.